What's up, guys? It's December 5th, 2023. I hope you guys had a good day. Today was challenging. I can't lie. This was a mess. Hopefully it clears up tomorrow because this was no bueno. I'll get into it. Might be a short one today because it's just range, buy low, sell high. These range days are a little bit slower, but still a lot to talk about because it's easy to get ripped up, so it can't be ignored. There's no such thing as noise in the markets. Everything has a meaning. Everything happens for a reason. Building off yesterday and today, yesterday's price action was also a range, and today we kind of consolidated. Yesterday we had a big up, big down, big up, and we just went range bound. You could buy the low and sell at the high, like a little, what is that called, like an ABC trade? I'm not sure, but this is the bottom of the range here. And so you could buy that and sell high, or you can catch this breakout and go for a leg one, leg two off of this move. Because this is the EMA is resistance, and this is a breakout trade to me, so we're breaking out above the resistance, and we get a minimal leg. I can't remember if I mentioned that yesterday. Today's price action. This was, excuse me. This was a mess. We have a big gap down, and we have continuation. I was watching this in the morning, and I thought there was a good chance. In the opening price action, the markets can move to support or resistance. And with the gap down and continuation, I was thinking it'd be a good trade to go short. However, that doesn't mean I'm going to go short because I was wanting to see the bounce around yesterday's low. And I think it would have been a better trade to get long on support rather than short into support. However, that trade never came, and so I saved myself a bad short. And these are trading range bars, so technically it's bad follow through, but it's still follow through for the bears. Nonetheless, it's a gap down with follow through. And then the next four bars are bull bars, and we go up. And this was a news bar, by the way. And we go up. So the first six bars of the day is a big down and a big up. Big down, big up. It means confusion. And look, range bound, range bound. So it's important we start to really emphasize or recognize, I guess is a better word, what happens at the beginning, the opening. What price action is taking place in the opening, because it can save us a lot of headache later in the day. So first six bars tell me that the market's range bound. We have a gap down and a push up. Big down, big up. The market's in confusion. People think to go short at highs. People think to buy the lows. People think it's a breakout. There's a lot of different things moving. If you caught this breakout, congratulations. I watched this happen, and I ended up getting long here for a second leg up. It was a really nice flag, leg one, leg two. I ended up really mismanaging that. Excuse me, but we'll talk about that in a second. So bulls get their breakout above the EMA. This breakout is really good, and I think it's really good because it's breaking through the EMA, closing the gap, and we are breaking out past several. Look at all of these bars. So this is a really good breakout to me. However, what kind of sucks was this, that we had a sell right around yesterday's high, which kind of tells me I was a little bit, man, I have something in my throat today. And I was a little bit cautious because I can't buy this close because it's just, I would just be so pissed off if the market went up and sold off. And that's what happened. Although your stop is supposed to be here or here, you wouldn't get pinged out, but this would suck to sit through. That's a lot of volatility. We could slip, we could reverse. I think that's almost so 10 points with a 1 Emini is a $500 drawdown for what? For not being able to wait a little bit longer. So to me, this could be a buy the close. It's not a good buy the close, but if you buy the close here and you put your stop here and you buy more here, you will make money, or you have a limit at the 50% level, limit buy, to bring down your price. So bulls get the breakout, and bears get a leg one, leg two, pull back into the EMA. I don't know if you guys saw this bar form, but it did race down, and so that is a leg two in another time frame, a smaller time frame, not a higher time frame. So bears get their leg one, leg two, trapping. The bulls are trapping the bears, and that's where this is a high two and this is a high one, or this could be the high one and pull back high two. I got along here for a continuation of this, and it worked out. The market's delivered. I didn't act correctly, so it's not the market's fault. But look at that. It's beautiful. And if you even want to be super conservative, you're going to make your money on the breakout. It trickles down and ends up being a failed breakout. I got caught, and I was trading on a challenge account today, so I wanted to test if I could really handle the range, and I bought here, and I bought here with 2 stop orders, so my price was right here. And we went up nicely, but then it came down so fast. I told myself I'm gonna get out on a bounce after this bar, and I'm gonna bounce. I don't even mean up here. I'm just gonna get out in a little bounce like that, and it just crashed. My stop was right here, and I was like, I'm gonna take a chance, and I moved my stop to where it's supposed to be, here with 2 contracts, which I did not like, and I bought more here, and I got out right here, and that's exactly how you're supposed to play range days. Not true all the way. I should not. Those were not the correct words to say. That's not how you're supposed to play range days. How you're supposed to play range days is taking profits quickly and scalping. I was stubborn and thought this was going to be a successful breakout, and I had gone for a move like this. How did I went? I went for this move. And so I was stubborn. And I should have paid attention to. I told myself, like, if we don't close above the 50% level, I'm gonna get out, and I did it, and I got trapped. It is what it is. I was able to hold my position and buy more here, and I got out here for a 1 point profit. I took a little break. No, I didn't. I got short here, and I went for the leg 1, leg 2. I thought that was a really nice trade, and at this point, I realized a big price action mishap, a misreading. I thought this was a breakout, but why would the markets have been raining for a while? It's not the breakout will come eventually. But when it's a breakout in a range, is it a breakout or a vacuum test of support and resistance? And that's when I clicked. When I saw this huge bar, I was like, oh my gosh, this was not a breakout. This was a vacuum test. This was a big vacuum test. So if we reverse and think about this as a vacuum test with a leg 1, leg 2, I think I would have been able to take profits quicker. Also wanted to talk about this price action right here very quickly. This is a good buy the close rally. And when we have a buy the close rally and we see doji start to appear, it doesn't necessarily mean the trend is over. In this case, it did, but it could mean the buy the close rally is coming to an end and we can enter into a bull channel. In this situation, that did not happen, but my alarm was going off when I saw these 2 dojis. I just was not willing to accept it, and that's my own problem. I still made it out, and I reversed my position and caught this leg. Yeah, so I saw this as a falling wedge here, and I thought it was really cool. This was a falling wedge, so I didn't buy this. I just kind of was like a little frazzled. I was really frazzled from holding 2 contracts. This snapped against me. Like, I saw an $1,100 drawdown, which is something I never want to see, so thank God I was on the challenge count, and I don't recommend anyone do that. Just hit out the correct way to manage this trade. Buy, hit out. It is what it is. Not every trade's going to be a home run. Most trades are never going to be a home run. So I saw this as a falling wedge, and I was like, wow, this is really good continuation for the falling wedge. I mean, have a higher low. This is the new low of the day. Not the new low of the day. Excuse me, not the new low of the day. I was thinking this could be the low of the day. Past bar 18, we have to start thinking, have we seen the high? Have we seen the low? Bar 18 is the 2nd hour. Okay, right here. So by bar 18, this is bar 18. We could be thinking, man, you know what? If this is a breakout, we've probably seen the low of the day. Or if this is a range, maybe we see a new low and we've seen the high of the day. And that's how we start to play with the probabilities, because the probability is if we've seen the high of the day and we're trading on the high of the day, it's safer to go short or wait for the breakout above the 18 bar range. And that actually never came. This was a bad follow through if you look at the 18 bar range. It immediately reverses a bar later. And then bears selling to support, which was put in by the news candle. And they get a double bottom here, and I bought somewhere around here. I can't remember because what I was looking at was, so we have this wedge here, and then we have this wedge here. And I was looking at this as a higher low off a bullish market structure. Didn't really get continuation. I got trapped and hit out of a trade, lost a little bit of money, and then I made it back on this literally the last leg. I made it back and I caught it because I was pretty frazzled up with all this. Anyways, I'm done with talking about that. Let's go on to, I'm sure you guys are tired of hearing me. I brought that up 3 times now. The market, man, today, after this leg, it was just hell, I think. This is just not tradable. I mean, it is tradable. It is if you trade with limit orders and you scalp out a couple points here. Limit order, scalp a couple points into the EMA, limit order a couple points into the EMA. When this type of price action happens, I think it's best for everyone to sit out and wait for 2 bar follow through above the range. I say 2 bar follow through because that's what I was taught. And it makes sense if you think about it because, look, there's no 2-bar follow through above the range. So we are range bound. If we had follow through, we would just keep going up. We got really bad. I did it even now, even, talking about the breakout with you guys. This is actually really bad for follow through for the breakout. I was a little bit annoyed that I had missed this, and I think that played a role in how I managed my trade. So I film all my trades and I will rewatch that, and I think that's a really good edge if you have the software to film the day. You can just set OBS up, film your day, put it into DaVinci. OBS and DaVinci are free. This is what I do every day. And when I go walk the dog, I render down a 6-hour day of price action into 10 minutes, and it's with my trades and that's like I can watch it once before I go to bed and once when I wake up, and I've just re-watched the day twice. I think that's really starting to stack because I'm starting to see my mistakes quicker and quicker and quicker and quicker, and now I'm talking to you guys. I really want everyone to do good, so I'm excited for next year. I think if we just keep studying, keep our head down, we can all make money, and we can meet up in Ibiza because we're going to Ibiza. One time we got to go to Ibiza, guys. Okay, anyways, back to the price action. Yeah, so we got to see 2-bar follow through, and we never got that, so it's just kind of done. Like, if you kind of miss this leg, you're going to have to admit, hey, this is not a good environment to trade in. I don't trade with limit orders. If you trade with limit orders, ignore this, but wait for the next day. The market cycle repeats itself. We go from breakout, channel, and then range, mid-term reversal, breakout, channel, range, breakout, channel, range. If this is the range, then the breakout will come. Will it come tomorrow? I don't know. Will it come on the overnight session? I hope not. But it is what it is. The market cycle repeats itself. And understanding that the market cycle repeats itself over and over and over again is kind of calming. I'm starting to really understand, like, hey, if you miss a trade, the market cycle will be back. It's okay. I like to trade the breakout phase of the market cycle because I'm realizing that is the safer spot for stop entries. These are all limit order entries. If we go look at the stop entries, this is a good stop entry, good stop entry, good stop entry. I don't think this is a good stop entry. You can put a stop entry here, but you're buying right under the EMA, and this could very well just turn around. These bars are just straight up 50-50. Okay, I'm going to get onto the bigger time frames because today was just a very boring day. I hope you guys didn't get chopped up. Bigger time frame. This is really bad follow through for the Bears. I was convinced that we were going to finally tag the EMA in like some sort of weird sell, but the Bulls are still here trying to push higher, which is crazy. So the EMA to me is going to have to get pulled into the price, which is bullish, I think. And the hourly time frame is exactly what I just talked about. It's a TTR, so if we're hourly time frame traders, we pretty much don't trade till we see 2-bar follow through. Here we actually do see 2-bar follow through, but the breakout, if this is the breakout, this is the follow through, this is the bad follow through for the breakout. There's a free video on YouTube about Ali Moyashari, and he's talking about an event. I'm butchering this, so please, I'll go get the right words, or you guys can do your own due diligence, but there's an event, there's confirmation, and there's a third thing. So what I'm trying to say is he looks for 3 things, and that's like the event is breaking out, the confirmation is working, but then this would be the third thing, and it didn't happen. It's like event response something. It's like a 12-minute video. If you guys go to Quant Systems Academy 2 page, you'll see it in their playlist. And yeah, the hourly chart's just in a tight trading range. Very, very bad follow through all around. Bad follow through. This is horrible to trade. That's today's price action. Yeah, man, I hope you guys are learning. I'm gonna keep it short. I was talking a little bit more than I expected on the 5-minute time frame, but that's what we're here to do, is learn and get better. Hit the follow button. I drop these every day at 3 p.m. I appreciate you guys dropping comments. Jared, the Trader Chick, thank you for watching the videos and showing me support. I really do appreciate it. I hope you guys are having a good December. Have a good one, guys. I'll talk to you tomorrow. Bye.